Okay, so accelerated benefit is a rider. What is a rider? A rider is something that you add to the policy as a like a sweetener, like something that you give extra to the policy. Okay, something that you add to the policy as an additional benefit. Additional benefit. You get it? So you have to understand what is a rider. So right here, this rider is going to give you additional money up front, not additional. It's going to give you your face amount, which is your coverage, death benefit, same thing, is going to give it to you up front while you're still alive if you were to become terminally ill. So then that means that that's going to reduce the death benefit. And that's what it's asking. What's going to happen to a death benefit? It's going to be reduced because you got some of it up front. You got some of it while
Okay.
you're still alive. Questions?
Yeah.
Any questions on that?
No.
Okay, so then the answer is going to be the death benefit will be smaller. D. You see that?
Okay. Oh, the headache. Okay.
The death benefit is going to be smaller because if you got some of it while you're still alive, then that means that when you die, whoever's a beneficiary is going to get less money.
Just how much left. Okay.
Whatever's left over. Yes.
Yeah.
Okay.
Okay.
Okay, Sunny, go ahead and screenshot that. Go for it.
Okay.
All right. I don't know why I'm not able to log into my meeting here. Okay. Next one. Okay, so you got it?
Okay.
Okay. Here we go. Next one. When may an insurance company use suicide as a defense against paying a death claim? When may insurance company pay suicide as a defense to paying a death claim? At no time, when the death occurs within a specific period of time after the policy is issued, only when there was a witness and the event, or D, at the time of suicide can be proven. The answer here is, without explaining, is B, because, so go ahead and screenshot that. I'll tell you why it's B right now. The reason that it's B is because there's a thing called incontestability clause. Incontestability means that after the policy is enforced for 2 years, then the company has to pay suicide. But if the suicide happens within 2 years, then it's not going to pay the death benefit.
Okay. Honey, in Colorado, it's only 1 year.
Okay, so in Colorado, it's 1 year. An insurance company can deny a claim if there's an insured by suicide occur at any specific period of time. So suicide provision, life insurance protects insurers. So in Colorado's 1 year. Okay. Yeah, California is 2 years. I don't see it here, but that's good that you know. Okay, so here we go.
I can give you the information and text you, honey.
Okay. Do you have any questions on this?
No, I understand this one.
Perfect. Let's go to the next one. Who can request changes in premium payments, face value, loans, and policy plans? It is always a policy owner that could request.
The policy owner.
Yes.
Yeah, that's one. I understand that. Yeah,
Perfect.
always.
Okay, thank you. Yeah, that's good that you tell me you understand whatever you understand. Let me know so we could go faster, okay? And go into the things that you really need help with. Which of the following is true about premiums? Which of the following is true about premiums on the children's rider in a life insurance policy?
Should it be unload this I think it's the first one.
It remains the same no matter how many children are added to the policy. Yes, I like that. I like that answer. So, test taking tip: always read all the questions before you answers. That way, you could make sure that there's not a better answer.
Okay, that means now
decreases. Yeah.
You give me the time. You can still put the A, honey. Then
Yes,
okay.
Yeah, it's definitely A. Good job. Okay, next. Okay, next one. Which of the following statements about suicide clause is a life insurance policy true? In a life insurance policy. Suicide is covered for a specific period of years and excluded thereafter. Suicide is covered as long as a policy is in force. Suicide is excluded as long as a policy is in force.
I
Suicide is
think it's
excluded
D.
for a specific period of years and thereafter.
No,
Yes.
D.
D. Yes. Great job.
Okay, D.
So it's
I
always
want to. Want to teacher. I want to ask you one more question. Why did you think they tricky us? Then why this time I go to just I feel company different, honey. That's last time I go to test. Do you know
yeah.
why?
The questions are never going to be the same as the ones you take with multiple choice. They're never going to be the same. The concept is what you have to understand. So if they ask you about suicide clause, it doesn't matter how they ask you, you're going to get it right because you understand suicide clause. And basically, you got 50 correct, 50% out of 70% that you need to pass. So you're not that
Yes.
far off. You just need to understand a little bit more concepts that you're having trouble with, and you're going to pass because from going to 50% to 70%, you're almost there. You're almost there.
Oh, thank you for giving me positive energy,
Yes.
teacher.
Yeah, you're almost there. So you have to just study.
Honey,
So you
it's my
even though they're
dreams.
changing the questions on you, even though they're changing them, you're getting it. You just need to understand more broader concepts. Like this one is, it looks like suicide. You have it. So it doesn't matter how they ask you suicide clause. You're gonna get it because you understand it.
Oh, okay.
Now we just need to know more topics that you
Okay.
master, and you're gonna pass it.
Okay.
Okay. If you're having a hard time with any of these questions, just stop me so that I could explain more in detail, okay? All right, what is
You're
the term?
also teacher. You already had a radio for me. I will start it. Listen again.
What radio?
You already had today. You had your recording.
I'm recording it,
Radio
so you
for
could.
me?
Yes, I'm recording for you, so you could
That's
listen to it
amazing.
later.
Honey, I will be sending a lot of people for your class. If you continue want to do this,
Okay,
I will be sending a lot. Okay.
yeah, let's build it. Let's build it. Okay, so what is a term for how frequently a policy owner is required to pay the policy premiums? What is the term for how frequently a policy owner is required to pay the premiums? What do you think it is, Sunny?
Schedule B. No.
The answer is
schedule.
A, mode. So mode is asking you how the frequency. So it's either monthly, monthly, okay, quarterly, semi-annually, or annually, okay?
Oh.
This is mode.
Okay.
This is mode.
Oh.
Mode is
Now I
either,
have
how do
to
you want to pay monthly?
understand this one now.
Yeah. So mode is how do you want to pay your premiums? Every month, every 3 months, every 6 months, every year? That's mode.
Wow. Okay. I understand this now. Okay.
Okay, perfect.
Thank you, teacher.
Let's go to the next one. Children's riders attached to whole life insurance policies are usually issued as what type of insurance? Children riders. What do you think it is?
Term.
Yes, ma'am. Term insurance. Good job.
Yeah.
You got this. Which of the following is true about the mandatory free look in life insurance policies? So right here, they're talking about the free look, right? Free look period. Oops.
Okay, they have to be paid first. And side. And I think it's B.
It commences at the application is signed. Free look period. It starts when the policy is delivered. So just remember that, okay? Free look period starts when the policy is delivered. Okay? There it is.
Oh, wow. Okay, one moment, teacher. Don't I go do again.
Yeah, screen.
Okay.
Perfect.
Oh, I have to remember. You have to remember for it deliver. Okay.
Yes, free look.
That's why people say they confused. They sorry.
Commences.
Okay,
Commences means that it starts. Okay. When does the free look period starts? When does it start? That's what they're asking. It starts
Okay.
when the agent delivers the policy to the client. That day, the free look period begins.
Okay. Okay. Again.
Next one.
Oh, teacher, I love you. I love you. I love you. I love you.
You're so sweet, Sonny. Thank you. Appreciate that. Which of the following is true?
Your family amazing. Had this husband or father, amazing, smart man.
You're too kind. You're too kind. You got to get to know me more, and then you're going to be like, well, you're not that smart. I don't know.
No. You forever.
That's funny. Okay, here we go. Which of the following is true? Which of the following is true of children rider added to an insured's permanent life insurance policy? So permanent, okay? So which of the following is true about children's rider added to a permanent? It is permanent insurance. The policy provides only until only the natural children of the insured. Each child covered must show evidence of insurability. It is a term coverage that is converted to permanent insurance at or prior the child's reaching maximum age.
I want to answer D.
Yes, good job. It is the screenshot. So
You
you
know
remember this,
why,
right?
honey?
When you
I
have a
remember
permanent,
this. No, also, honey, I remember this is the children and the how to say PRIO. Then some. I just remember this one, honey.
yeah, good. Yeah, just know that when you have a permanent policy, the children are always term insurance. Always term insurance.
Okay. Oh, I have to remember term.
Yeah.
Okay.
Okay, so I'm gonna erase it. The children, hold on, let me do it again so you could screenshot it. The children is always term insurance. There it is.
Perfect.
Yeah.
Oh, you're amazing. You're amazing. Oh, you're amazing teacher, sweetheart.
Thank you. Appreciate that. What provision in an insurance policy extends coverage beyond the premium due date? Beyond the premium due date extends coverage. What do you think it is?
Yeah. And let me think a few minutes. I cannot.
Okay.
Grace?
So premium due date. Yes, it is. Grace period. Good job. Yes. Grace period. Because okay, so let's say your due date is November 7, right?
Okay.
And then you don't make a payment. So no payment. So you don't make a payment. So your policy should lapse. Your policy should cancel because you didn't make a payment. But there's in insurance, there's a grace period that they give you. I don't know about Colorado. Okay, so let's find out about Colorado. But they give you, till December 7th. It's still you're still covered. Okay.
You mean they give you extension 1 month?
In California, it's 2 months. But that's okay. Right here, they don't ask you for months. They just ask you, how does it work? They give you an extension. They give you an extension to catch up with your late payments. And then if you don't catch up, then your policy ends. Okay. So in California.
You, honey, and then teacher, did you hide it? They sometimes they hide it surrender money. They can use some the value money cover. No. Because sometimes people they hide a surrender money.
Yeah.
They cannot use surrender money card and
if they have a cash value policy, they could use the cash value to pay for the premiums, and that rider is called an automatic premium loan rider. That's on the test too.
You have to be okay. There have be other answer different.
It's a different question.
Different answer.
Yeah, it's a different question.
Different question.
Okay. But it's good. You could make the connection. Okay, so watch. Let's make that connection. Okay, so watch. So let me how can I do this? So let me go ahead and screenshot it, please.
I did it. I already did it, teacher.
Okay, so now I'm gonna show you this. Okay, so I'm gonna zoom in right here. Okay, because I want to show you something. So the policy gets issued, okay? Then if you miss payment, okay, then it goes into a grace period, okay? And if you go past the grace period, right? If grace period ends, so if it ends, then what happens is that it's going to go to the automatic premium loan provision. Okay? Automatic premium loan provision uses money from the cash value to make a payment.
Okay.
So that the policy stays active.
Okay. Okay, teacher. I want to ask other question. Normal all life insurance and only in term insurance, you don't have this cash value. Any
Yes.
and then universal and whole life always had a cash value.
Yes.
They have to be added an auto medical premium, and they had the information. They always had a cash value. If something happened, people miss the payment, they give either way they give you 1 month, catch you continue pay. Either way, you call insurance. Can you use my the cash value loan for continue pay me? How long I can get my life insurance pay?
Yes. So automatic premium loan, you could only use it on universal life, whole life, index universal life, or variable life. So I'm gonna put right here, not term insurance.
Okay.
Not term insurance.
Okay. I got it. Are you done here? I can.
Yeah, we're done.
Take
you could screenshot.
Okay.
I'm done.
Okay. Thank you.
Okay, perfect. So let me go ahead and zoom out.
Next time, honey. Next time I go to California, I will be meet your family. Get out. I will be giving the whole family get a big hug. Oh my gosh, I will be amazing.
Let me
Okay.
share screen again. Something happened with the computer here. I'm trying to zoom out. There we go. Okay, perfect. We're good. Okay, so grace period. Now you learn about automatic premium loan. The grace period starts, okay, when there's a missed payment, and the automatic premium loan starts when the grace period ends. Okay.
Yeah.
Let's check out the review content to see grace period for Colorado. Usually 30 to 31 days. The grace period for a time or premium due date that the policy pays premium before the policy lapses, usually 30 to 31 days. 1 month in Colorado.
Yeah. I
told you 1 month.
Yeah. Okay, I didn't know that before. Honey, I didn't know.
Yeah, California 2 months, Colorado 1 month.
Yeah, then California most is 2 years, and suicide Colorado 1 year.
Yes, there it is. That's good to know. All right, next one. Next one. An insured commits suicide 6 months after his life insurance policy was issued. The insurer will what?
Pay nothing.
Pay nothing.
Oh, one moment.
Oh, look at that.
One moment, sweetheart.
Tricky right here, Sonny.
Yes, one moment. Insurance committed suicide 6 months after. 6 months after, that means already over 2 years or over 1 year.
No.
Yeah.
No. So the policy was issued. Okay. Policy was issued. And then 6 months later, he committed suicide.
That means pay nothing. 1 moment.
Yeah.
Oh, no, honey. Refund the premium and pay it.
Yes.
Fee.
Yes.
Yes.
So it's not going to pay nothing. Yeah, so the
Yes,
insurance
yes.
company is not going to pay the death benefit, but they're going to give them the money back.
They give that the 6 months the premium and pay back. Okay,
Yes.
now it's me, honey. And then I already feel different, but they have to be pay nothing but refund the premium paid.
Yes, so it's
They should
tricky.
be,
The answer
yeah.
A is true. The answer A is true, but see, the reason is not that true is because the best answer is refund premium. This is the best answer.
Yeah.
This one is
Yeah,
true.
honey, I already know this one. I did it. I just too fast. Yeah, yeah,
Okay.
yeah. Good job. Yeah.
All right,
Thank
next
you.
one.
Thank you.
Let's go to the next one here.
Okay.
Which is true about a spouse term rider?
Spouse true term rate coverage on those. Andy, good man. I don't know how to read it, but I okay.
Ultimate time.
Spouse term. The rate should. How about you? How about you? D? No.
Yes. Yes, the answer is D. Good job. It is term. So again, always any time of spouse rider or child rider, okay, it's gonna
Uh,
be
uh,
term, level term.
Level term. Yeah. Okay. I tell teacher, I'm not now. You give. Can you go back, sweetheart? Teacher, go back to that one.
Oh, I can't go
Go
back.
back.
I can't go
Okay,
back.
that's
Sorry.
okay.
What did you want to
That's
ask
okay.
about
That's okay. And then I say I just want to learn. I didn't get it scream the last one.
that?
The
Ooh,
you read that and the how to say the term and the children and the always. I'm okay now, honey. I'm okay.
that's okay. I have recording of this, so you could watch it later, okay?
Okay.
Okay, what is the purpose of free look period in insurance policies? Free look period.
Oh, for free. They should be no. None. I cannot answer this one.
Okay.
Teacher.
It allows the insured to temporarily suspend coverage. Nope. It allows the insured to reject the policy for a full refund. The answer is C. Free look period is this. Let's say I'm your client and you're my agent. You
Okay.
deliver the policy to me. I have to
Okay.
check out the policy in 30 days and say, you know what, Sonny, I don't want the policy. I want a refund. That's a free look period. A free look period
Oh,
of time.
that mean
It's a period of time I choose to look at the policy and decide if I want it or not. If I want it, then I keep it. And after 30 days, free look period ends. Now I don't get a refund if I don't want it anymore after 30 days. But if I don't want it and I return it back to you, you have to refund me my money because it's in the free look, because I returned it back to you during the free look period.
Okay, one moment, teacher. Don't go. I have to go. Take it. Can you do that before free
Yeah.
looking?
Yeah. So the free
Then
look period, right? This is what
yeah.
you're talking. Hang on 1 second. This is what we're talking about right here. Free look period. So
Okay, we answered
it allows the
free.
insured, the client, okay,
Okay.
for a full refund.
Oh. That mean normal refund. I'm just example. Last time I had my new policy. They want me ready the void check. Then they say will be charged how much money. They just almost like just 1 month. Not too much money.
Yeah.
Yes.
Yes. Yes.
Just 1 month. They take you about 1,000 or 1,500. It doesn't matter. I'm between 30 and how's it 30 1 month before I turn back the policy. Then they give me refund money.
Yes.
If after, that means I'm already agree the policy, or I want to over, that means the money is gone. Yes.
Correct. Yes.
Okay.
Yes. You got it right. Did you screenshot it?
I got it. I got it, teacher.
Okay, so now let's do this. Let's scroll a little bit because I want to see Colorado. It doesn't say nothing about the amount of days. That's okay. All right, let's go to the next one. Regarding a free look provision, the insurance company, again, question about free look provision, free look period, same thing.
Okay. Okay, one moment. This should be, must be an say.
Nope. Again, free look period is all about refund,
And then A
full
must
refund.
be oh,
See that?
refund. Yeah, A.
Free look provision is all about the refund.
Okay.
Return the policy for a full
This
refund.
one, teacher, I almost look at this. This is my first time look at this question, honey.
Okay.
I didn't say this question before. I don't know. Maybe I didn't pay attention.
Yeah, this is a
Okay,
popular.
I understand now.
Yeah, this topic is really popular on the test. It does come out a lot. So this is probably one of the questions that came out on the test, and you're like, "What is that? I didn't understand that." It's probably this topic right here. You got it? Screenshot?
I got it now. I did it.
Okay.
I did it, teacher.
Next one. The accelerated benefit provision will provide for an early payment of the death benefit when the insured what? So remember, this was question number 1. Accelerated benefit provision.
Okay. Sorry. Okay. 1 minute. Borrow money. Sorry. I want to answer A. Oh, no. 1 moment. Earlier payment date. Dice benefits when the insurance dice benefits insurance become temporary. Wow.
Okay.
I cannot answer this one.
The answer is D. So just remember this, okay? Remember this.
Answer is D. Okay.
Yes, terminally ill. So it's all about accelerated benefits, terminally ill. So just think of this, okay? Accelerated benefit equals terminally ill. Terminal illness.
You mean it's sick? Very sick.
You're sick, you're about to die. Cancer, for example.
Okay.
So remember, if the client has, let's say, $300,000 in coverage, okay? And the client then becomes terminally ill, you could withdraw, let's say, $100,000 accelerated benefit, okay?
Okay.
So then how much is the client gonna get? So if he dies, so if the client dies, so clients,
will be the other 200?
yes, client dies, the beneficiary gets 200,000.
$1 and okay, left. Okay. They give you and then when you very sick time, or you will be 1 month, then 2 months, 3 months, then they can give you the money for your to pay medical bill, or you want to spend it. Then when you die, your the left how much your family and beneficiary get it, the money.
Yes,
Yeah.
exactly.
1 moment.
You got it.
Okay.
I like that you give me back feedback. It gets me to understand that you are understanding. That's great. Okay, let's go back and let's do it one more time.
Okay. Wow. One more time?
One more time, or you want to do another chapter? You want to do another chapter?
Let's go to other chapters, sweetheart.
All right, let's do other chapters. Let's go. Yeah. This is a big one. Types of policies. You want to do that one, or do you have something in mind?
No, do sweetheart, do this one. Do this one.
This one?
Type of life. No. Type of life in policy.
Okay, let's do it. Yeah. That's a big one. That's a big one. So that's a good choice.
Thank you.
Which of the following would help prevent a universal life policy from lapsing? Oh, we talked about this. We talked about this.
One moment. I have to adjustable premium and tiger premium.
I'm going to give you some tips, okay? Universal life has
Yes.
cash value.
Okay. Then okay. Do I have the fixed amount D
No.
or A? D or A or D?
Adjustable
Tiger
premium corridor, corridor insurance. Oh, you know what? This is Colorado based. See, target premium. Okay, so this one, target premium. Let's read the rationale together. The target premium is recommended amount that should be paid on a policy in order for the cost of the coverage, in order to cover the cost of insurance protection and to keep the policy in force. Target premium. Okay.
Oh my gosh, yeah, honey, this exactly amazing and question answer. That's why I think I didn't know this one, honey, before,
Okay.
honey. No.
So let's talk about this. Universal life. Universal
Mm.
life has other names. It's called flexible. I don't know how to spell that. Premium,
Yeah.
adjustable life. Okay.
Only two? Only two, flexible and adjustable.
Yes.
Universal?
Flexible. Yeah, universal is also known as, has other names, which is flexible premium adjustable life.
Yeah. Okay.
So
Okay, that's I tell you, and teacher, I'm always confused flexible and adjustable. That's why I don't know. Just go to whole life, go to universal life. Now I have to remember now. It's adjustable, and they ask a question adjustable and flexible. It's universal life
yeah, so look at
policy.
this. Flexible premiums means that the
Mm.
premiums are adjustable. So you got to hit a target on universal life so that it doesn't lapse, so that it doesn't lapse. Okay? Now check this out.
Okay.
Now, adjustable life means the death benefit. It's talking about the death benefit. Okay?
Oh,
Death benefit.
wow.
The coverage amount. You could change the coverage amount. Okay?
Okay.
So that's
I don't
going to
understand.
help you because
Teacher.
yeah.
I don't understand. Can change the death benefits. I don't understand that one. Just same like before. We're sick. They pay you some
No,
money.
no,
Then
it's
after you
different.
die,
No, it's different. It's
no.
different. Adjustable life means this. Let's say I'm your client and you sell me a universal life policy. I'm gonna say, Sonny, I have you sold me a $500,000 policy, but you know what, Sonny? I want to get more coverage. I want 700,000 now. So the universal life is gonna allow you to give me more coverage without qualifying.
You pay. You just what from your age, and you have to pay how much a premium. You get more policy now.
Yes, more coverage
Yes.
on the policy. Yes. So a universal life, you could always change the payment, which is flexible premium, but you could also change
Oh.
the coverage, adjustable life.
Oh, I
You could
see.
change both of
Okay.
them. So
Wow.
so universal life is very like you could modify. It's very flexible. You could do a lot of things with universal life.
But teacher, but universal life only 70 and how to say 70 years period? Then
No,
how can no?
no, universal life, as long as you're paying high
Uh,
premiums, you could keep it for a long time.
uh, really?
Yeah, like term
Oh, I don't
insurance.
understand. How can mm,
Like, let me give you an example. Term insurance,
uh,
the payment is
uh,
whatever the payment is, the payment is. You see what I mean? and it stays
Yes.
fixed for the period of time, for the term. Like let's say it's a 10-year term, then the payments don't change for 10
Uh,
years. Okay.
okay.
Whole life is the same thing. Whole life, the payments stay fixed till age 100. They don't change.
Yes.
Okay, they don't change.
Okay.
You can't put extra money into the policy. If the payment is 300 a month, then that's it. But
Okay.
universal life is different. Universal life, you could start at 100, and if you want to put in more, you could put 500 a month, and then, the next 3 months you could reduce it to 300 a month. You could change the payments on
Oh.
universal life. Universal life, it's flexible premium.
Oh, but the death benefits will be same.
The death benefit will be the same unless the client wants you to change it, and you could change it. But on whole life, you can't change it. On whole life, if the coverage is 300,000 and they want more coverage, you have to sell them another policy.
Okay. One moment, teacher. I had one more question. If universal life, I'm not die, and I pay 100, but I'm died at 101 or 105. That means my policy is gone. My death benefits is gone. Yes.
Say that again, please.
I say if I had a whole life insurance,
Yeah.
then I pay and this is 100 period. If I'm died at 105, then there's a payment the premium payment is 100 stop. Then I died at 105. That means my benefits, my policy is gone. Yeah.
No, whole life works like this. I'm going to show you, okay? So you want a screenshot? Did you screenshot this already?
Yes, I do screenshot one more time. Okay.
All right. So I'm going to show you whole life.
I got it.
All right.
Okay.
Here we go. Let me show you whole life because whole life is a little different, okay?
Okay.
Okay, so whole life. Whole life insurance, okay, works like this. The best way to explain it is a box, okay?
Okay. Okay.
Let's say the client has a coverage of right here of 500,000. Okay? That's the death benefit.
Okay. Yes.
And this is where they start, right? So
Yes.
these policies end at age 100. At age 100 it ends, okay?
Okay.
I'm gonna put ends, but in the test they call it endows, matures, okay? So this is how it works. Let's say the premium, okay? So I'm gonna use yellow for
Okay.
the blue for premium. So the
Okay.
premium is fixed. Let's throw a number, okay? Let's say for 500,000, this client's gonna pay $500 a month. Let's say, for example,
Okay.
it stays fixed till when does it premium end? At age 100. The premiums
Okay.
end at age 100. Okay, so now let's go to red. Red is the cash value. So the cash value is gonna grow, and at age 100, the cash value equals 500,000.
Okay.
You see that?
Yeah.
So what happens at age 100? The policy ends. At age 100, the policy terminates and the client gets $500,000, which is a face amount. So the cash value equals the face amount. Policy ends. You just get your money, 500,000.
Okay, teacher, can I use can I use my an example to you?
Yeah, go ahead.
Okay, I had a 500 policy whole life. Then
Hey,
now,
hold on, Sunny. Hold on. Sunny.
yes.
It's because I'm recording this and I want to post it up publicly. So let me pause it since you're going to give me personal information. Give me 1 second, okay?
Okay.
All right, go. Wait, Sunny, okay? Wait. I want to make sure this is not recorded. Go. All right, let's continue here. Which type of life insurance policy allows the policy owner to pay more or less than the plan premium? This is good. We talked about this one. So this is so we're talking about premium right here. Premium. More or
Let me
less?
thinking. More and less. And
Or less.
how variable whole life?
So remember, universal life equals flexible premium adjustable life. Remember that. That's if you remember that, Sonny, you're gonna get a lot of questions right, because right here is gonna help. Like, for example, this question.
You means more and less is flexible.
Yeah, right here. Yep. Look at this. Flexible premium. Flexible premium means you could, so that means that premiums could be more or less. It's flexible.
That means universal.
Yes, the answer is universal. You see that? So if you remember that universal life is flexible premium adjustable life, then you could cancel whole life, you could cancel term, and you could cancel whole life. There it is. Easy.
Okay.
Questions, Sonny.
No, I catch now. Teacher.
Okay, perfect. Let's go to the next one. Okay, the policy owner of a universal life policy. By the way, you're talking about index universal life. Index universal life is a universal life. Variable universal life is a universal life because it has it. It's there in the word, right? Obviously. Okay. So here we go. Policy owner of a universal life policy may skip paying the premiums of the policy, will not lapse as long as
can I answer D?
the premium payments, the previous premium payments were high enough to create an excess premium. I like it. I like that answer. The policy owner contains sufficient cash value to cover the cost of insurance. Oh, this is a good one. This is a really good one. I was going with C. Let's go with D. Okay, the answer is C. This is a good one. I like this one. This is a good question. Screenshot.
You do all the time. That's amazing.
Okay, so here we go. The universal life. In universal life, the policies may skip premium payments without lapsing the policy as long as the policy contains sufficient cash value at the time to cover the cost of insurance for the premium period.
Oh.
So this is good.
Okay, it's different.
Any question on this?
No, I catch now.
Okay, good. Okay, let's go to the next one. What is the purpose of establishing the target premium for a universal life policy?
We did it before, the target.
For a universal life policy. What is the purpose of target premium for a universal life policy? Okay, this one we kind of talked about. Remember, target premium for a universal life.
Yeah, that's why I'm just thinking that. Yeah, I'm just thinking that policy faster. How about the D? Pay up the policy faster.
No.
No, that's a C.
The answer is B, to keep the policy active. Target, look at it this way, okay? Target premium, look at it like the minimum premium. So as long as you pay the minimum, the policy will stay in force. As long as you pay the minimum, the policy is going to stay in force.
Then also they keep the policy too.
Yeah, the policy stays active if they're paying the premium. But in the test, it's not going to say minimum premium, it's going to say target premium.
Yeah, that's different. He catch that question and answer. Okay.
Yeah, they have different answers. Any questions?
No,
All
thank you,
right,
teacher.
let's continue. In which of the following cases will the insured be able to receive the full face amount from a whole life policy? So right here, we're talking about whole life, okay?
It's then C.
Remember the
Answer
full
C.
face amount.
Yeah. Home. Oh, one moment. Listen, no name. Can I answer C? No. The whole life policy. Whole face amount. As soon as cash. Whole life. Face amount. Oh, different. Not the beneficiary when the policy paid out. I did answer C. I said 100.
Yes, you're right.
Yeah, H100.
You're right. Great job. Awesome.
All right.
Perfect. Let's keep going. The insured is also the policy owner of a whole life policy. What age must the insured attain in order to receive the policy's face amount? Another one. Same thing. Whole life, face amount,
100.
100.
The 100.
Yes. Easy. You got it?
Yeah, I got it. I got it.
Which of the following is incorrect regarding a $100,000 20-year level term insurance? So now we're talking about level term insurance.
Level term. If it
And right here they're asking
incorrect. I have to
incorrect.
remember incorrect. Yeah. If the insurance died before the policy. Before, I don't know. This. I can
If the insured
answer
dies,
A.
let's find out. If the insured dies before the policy expires, the beneficiary will receive 100,000. Yes. The policy will expire at the end of the 20-year term. That's kind of true. At the end of the 20-year term, the policy cash value
Oh
is
yeah.
equal. Does term has cash value?
No cash up. No
No
cash
cash value.
value.
There it is. That's the answer.
Oh, one moment, teacher. That's his number C. Okay. Oh, look. Okay.
Look,
Yeah.
term has no cash value.
Yes. Okay. Have to be careful reading too. Okay. I got it now. I got it now, teacher.
I got a tip for you. Read the question twice because that way you understand what they're asking you. And then before you answer any question, read all the answers once. And then that's gonna help out to get the right answer. It's gonna help clear things up.
You mean read the question twice, then
Yeah,
go back to answer.
yeah, read this twice. Okay, always read it twice. Oops.
Okay.
Yeah, always read it twice.
Twice. Okay.
When
Then go
you're
back to
taking the
answer.
test, when you're taking the real test, always read it twice because it's gonna help out to not get confused.
Okay. Thank you, teacher.
Policy owner policy wants to increase the death benefit. Remember, adjustable life is
Yeah.
universal life policy. Remember that?
Universal. Yeah, I remember that now.
You could do it.
Increase the death benefit. Increase. The universal can increase, decrease. They can extension. I cannot answer this one.
Okay, right here, the answer is B. The death benefit can be increased. You see that? So you could increase the death benefit. You don't need a new policy, right? And this is fun because it can be increased. Yes, it can. Yes, it can. And then D says the death benefit can be increased only when the policy has cash value. I mean, it has cash value, but that's not the reason you could increase it. You could increase it because it's a universal life. Universal life, you could increase it anytime. You just have to make sure you're insurable. You have to provide that you're insurable. You just have to show that you're healthy.
Oh, okay. Oh, you want to increase time. You have to be a medical exam.
Yes.
And they prove you healthy.
Yes.
Then you can increase your the policy. Then you have to pay more premium. And also from your age too.
Yes. Yes.
Okay.
You got it all right.
Now I catch this now. Okay. I have to remember. Okay. You go, teacher. I understand now.
You're gonna pass. You're very, very smart person. You just have to review a lot of quizzes, Sonny. A lot of quizzes. Take a lot of quizzes over and over and over and over and over, and you're gonna pass.
Did you teacher? Did you will be give me a lot quiz and exercise for example? Do you will have that, or I
Yes.
have to go to? Okay.
Yes, I'm gonna before we end the meeting, I'm gonna register you for classes, okay? So you can have access to this.
I love
Okay.
you. Thank you.
Which of the following best defines target premium in universal life? Here we go. We're talking about universal life.
Yeah, universal life. Universal life.
Universal life, also known as flexible, premium, adjustable life. I'm gonna write that every time so that you could remember, okay?
Yeah. Universal. Okay, this one cannot do that. This one cannot do. This one can keep the policy.
Remember, it's talking about target premium, which is
Yeah.
also known as minimum payment. Minimum payment.
Ornament bounties the policy only pay and policy. I want to answer D.
No, this is maximum.
Oh, okay. Insurance. Keep the policy together lifetime.
Now this one, A says minimum, but right here is talking about annually renewable to make sure the policy is annually renewable. It looks like a good answer too, but I think the right answer is C. It's C. Look. Okay.
I answer C.
C, remember, it's a minimum payment to keep the policy in force. This is what you got to remember, to keep the policy in force. To keep the policy in force. This is what you got to remember.
Keep the policy force and the life. Do you think I should remember lifetime or just keep the policy?
Yeah, yes. Might as well read everything. To keep the policy in force throughout the lifetime. Yes. All that is important.
I should be, this is annuity renewable. I don't think that is the good answer for universal life. That's complete not it. I believe we just you tell me say A, B, C, D not right. C is correct. Yes, thank you, teacher.
Yes, this is not right.
Teacher.
Okay, this is not right here.
Yeah.
Yeah, you're right. Let me delete that. You're right. Yes. So this one is good. Look at this. Minimum payment is recommended payment. There it is. Recommended amount to keep the policy in force. Okay. Here we go. You ready?
Okay.
Let's continue.
Yeah, one more. Okay. Yes, I got it.
Okay, a policy will pay the death benefit if the insured dies during the 20-year premium payment period, and nothing if death occurs after 20 years period. What type of policy is this?
C, level term.
Yes, good job. Yes, good job. There's nothing to teach here. It makes perfect sense what you said. Okay, which of the following statements is correct regarding a whole life policy?
Whole life policy. That's not it. That's not right.
It is guaranteed, so that's wrong.
That's not right. That's right. Not right. Yeah.
The policy premium is based on the attained age. Nope, it's not based on attained age. The premiums are fixed. They're fixed.
Oh, okay. The death benefits increase and decrease.
No, it doesn't
Okay.
increase or decrease. It stays fixed.
Yeah. Yeah, that's the okay. And the D correct
E is the answer. You see that? So the policy owner is entitled to policy loans? Yes. Yes, so that's
the
one of the
whole
things about
loan, the whole life can get the policy loan.
yes, the
The
policy owner.
the policy owner.
Policy owner. Mhm. All right, let's keep going.
Okay. Yeah.
During partial withdrawal from a universal life policy, which portion will be taxed? So again, universal life.
Universal life. Oh, interesting. Cash value.
So what is going to be taxed? What is going to be taxed? Cash value.
Uninterested.
I like that answer too. Good job. So which is the profits, right? Profits.
The profits, yeah.
What are the two components of universal life? Here we go. We're talking about universal life, which is flexible, premium, adjustable life.
Okay.
Ooh. The two components. One of the components is insurance. Okay. One of the components is insurance.
Okay.
So this one is wrong and this one is wrong because it doesn't have insurance.
Just give me 1 minute, teacher. Universal. Can I answer A?
Ooh, it could be D too, but let's go with A. I think it's D. Yeah, it's D.
D.
Why? Why is it D? Why is it D? Because investments is on variable universal life. That's investments. You see that? But right here.
Oh, that's I had it before a lot. I don't understand the variable universal life. Now you have to be remember investment. It's variable universal life.
Yes, ma'am. Yes, ma'am. It's invested. But right here, they're not talking about variable, or they're just talking about regular universal life, and that's going to be
yes
cash account.
But I have to understand before. I don't understand before in investment and with the variable. I did a lot wrong, but this time I getting better. But now we didn't talk about universal life now. But a variable question this one now. Later maybe I will be understand more and more variable universal life. Now I understand this one. Investment with variable universal life. It's family.
Yeah.
That's right, teacher.
Yeah, variable is invested in a separate account. Okay, let's continue. Ready?
Yes.
What are characteristics of whole life? Oops. Is permanent protection. What characteristics makes whole life permanent protection?
Permanent protection. Okay. On whole life, I want to say. How do I answer? Living benefits?
No.
Oh, guarantee? No. 1 moment. Premium. Death benefit? Oh, my coverage until death and the age 100.
Yes, ma'am. Yep.
Oh, that
Almost
matters.
always, if you look at an answer that says age 100 and it's a whole life question, that's the answer. Like 9 times out
That's
of
the
10.
answer. Yes. Now
Yeah,
I understand now. Yeah.
not
Doesn't matter.
always.
The
Because
whole life
sometimes,
will have the age.
yeah, not always, but sometimes they trick you. But like 9 times out of 10, that's gonna be the answer. 90% of the time.
Okay.
So you can't go
Okay.
wrong with
Okay.
that. Always choose age 100.
Okay. Okay.
Just read the question correctly. Don't assume, don't go too ahead of yourself. But 9 out of 10 times, the answer is going to be age 100. Anything that has that word age 100.
I catch now. I catch now, teacher. Thank you.
Okay, let's continue. What does level refer in level term insurance?
Okay. Level term. I want to answer.
What do you think it is?
I think it's premium. Say no.
It's going to be
Level
a premium, yes.
B.
Base amount. Wow, okay, so this is tricky right here. I thought it was premium too. Okay, let's read the
Base.
rationale. Okay, by the way, every time every time you get a question wrong, it's important to read the rationale so that we could understand why we got it wrong. Okay, so let's read it. Level term policy,
Yes. Yes.
maintain
Yeah.
level death benefit. Got it. So level death benefit or face amount throughout the term of the policy. In level term insurance, the premium also remains consistent over the years, unlike premiums of many other policies, which increase in the policyholder ages. Got it. So the death benefit stays the same.
Face amount. Can you, teacher, one more your explain to me one more time?
Explain?
Yeah.
Okay, so
Okay.
in term insurance, what stays the same is the face amount. What stays the same is
Okay.
the face amount. The premium could change, but the face amount doesn't change.
Oh, now we catch now. Yes, we catch now. I catch now. Face amount. Yes, I catch now.
Yeah, okay.
Yes.
Perfect. Awesome. You screenshot?
Now one more time. Okay. Okay, done. Thank you.
Okay, let's go to the next one. Oops. Where is it at? Oh, we're done. Okay, awesome. Okay, so let's go ahead and I'm gonna stop this real quick. All right.